Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Let's focus once again on Bajaj Finance. The stock is down close to about 4% but at least the fall has been arrested now. So it's still down about 4.5%, but it's not falling some more as we speak. Abhishek, run us through the key highlights.
The key highlight is this loan growth of 35%, may be the lowest loan growth in last, let's say, 3 to 4 quarters. And that is a key reason why the stock may be selling off. Also, look at the valuation factor. It is trading at price to book value of more than 7x in FY19 and more than 6x FY20. And the stock going into the results is at 52-week high. Despite all these concerns, of the lower loan growth, you look at the gross NPA. They have adopted to IND-AS reporting of accounting for NBFCs, and despite that, the gross NPA stood at 1.39% and net NPA at 0.44%. So this 1.39% compares to about 1.48 in the previous quarter, and they have seen no hiccups in terms of the provisions, and their provision coverage ratio still remains strong at 70% levels. So given the fact that just a tad bit of lower loan growth has impacted the stock movement that we are seeing. Otherwise, there is a strong performance, all-round performance that has come in terms of asset quality or the P&L meeting to our estimates.
Well, the loan loss provision is significantly higher on a quarter-on-quarter basis. So 326 crore versus 231 crore on a quarter-on-quarter basis.
They have taken IND-AS recognition. I'll just slightly explain. This IND-AS recognition stands for NBFCs in terms of provision is that whatever losses or slippages you have had in last 3 years, X of recovery that you expect in those slippages, you have to provide for those NPAs. So that is the reason why the provisions have increased quarter-on-quarter, because the management in the press release have clearly mentioned that they have adopted the IND-AS in their financials reporting, and that is why the numbers have been adjusted. So whatever losses or slippages might have been in last 3 years, whatever recovery they expect, the net of amount has been provided for, and that has to be provided from the net worth, and they have provided from the P&L itself.
Okay, all right.
Is this a one-time impact on provisioning, or going ahead also the loan loss provisions will be higher?
I have no clear idea whether this is an amortized expense or this is a one-time expense. That management is coming on air soon, so we'll get a clarity over there.
Well, Nigel, I think it's recovered again from
good $100
bucks
on the low point of the day, I think so. $100 on the low point of the day, I think so. Quite a big recovery is what we've seen from the low point of the day, so keep an eye out on that front as well. Thanks so much, Abhishek. It's the case when the topper in class, you expect them to just give a better and better performance. So let's see what happens on that front. But let's move on then. Let's tell you how to trade the Nifty. Ashwini Gujral and Rajat Bose are with us. Ashwini, Nifty is as flat as can be. We've had plenty of action though from the morning. What's the trade on the Nifty?
See, we are failing at 11,000. Now, there is some support at 10,930, 950. And my sense is that at some point it will get broken, possibly today or tomorrow, because at higher levels there is fairly clear selling, and one side must give, because you cannot continue in a 100-point range forever. So for the moment, getting short on Nifty, Bank Nifty with a 11,000 type of stop seems to be the way to go, and obviously results create a lot of volatility. So that way, right now, Stray Infra is a sell with a stop of 60, target of 54. Jain Irrigation is a sell with a stop of 77, target of 70. And IGL is a buy with a stop of 268, target of 287.
Okay, let's get in Rajat Bose as well into the discussion. Rajat, what are your trading ideas?
Well, I have one buy and one sell. I'm buying Bharti with a stop below 341.50, targets 350 and 353. And Indigo looks weak to me. I place a stop above 1085 and target would be 1040 on the downside.
Okay, all right. Thanks so much for that, Rajat, as well as Ashwini, for joining in and giving us all those details. By the way, I think the European markets have opened up, so let's see whether or not we're getting any kind of support coming in from there. The last couple of days, the DAX has been the relative outperformer.
Kotak Mahindra Banks also flashing for you on your screen. That will come up. The net profit is coming at 1,025 crore, which is lower than market expectations of 1,158 crore. So 1,025 crore would be a growth of about 12.2% on a year-on-year basis versus expectations of 26 to 27%. So the standalone net profit has come in as a bit of a disappointment. The asset quality has actually improved. Not that it was a big problem for Kotak Mahindra Bank, but the gross NPAs are now 2.17, which compare with 2.22, while the net NPAs have improved to 0.86 versus 0.9. So gross NPAs on a standalone basis have improved, and even if you look at it on an absolute basis, flat for the gross NPAs at 3,900 crore, while the net NPA has actually improved by about 140 crores on a quarter-on-quarter basis. So right now, the stock is down close to about 1% as the profit growth has come in slightly lower than street expectations, a growth of about 12.5%. NII is at 2,583. Now that too is lower than the CNBC TV18 poll. It's missed our expectations by nearly 100 crore in terms of the NII. Now the stock is reacting. It's down close to about 1.5%. Nigel, even in the case of Kotak Mahindra Bank, it is a case of the stock doing very well, very high valuations. Abhishek and me were just discussing how Kotak Mahindra Bank is actually the most expensive private sector bank. It's trading at 4.5 times FI. Yeah, go ahead.
The net interest margin is at 4.3%. So sequentially, there's a drop in net interest margin also. It was at 4.35% in the previous quarter, and it has also come down from previous year. So previous year, the net interest margin was at 4.5%. So from there, the net interest margin has come down. The low-cost deposit share, however, remains healthy at 50.3%. That compares to about 43.9% in the previous year's same quarter, while it compares to 50.8% in the quarter gone by, that is Q4 FY18.
Okay, but Abhishek, this 4.5% that you're talking, 4.3%, that's on expected lines, isn't it?
That was on expected line, but it has come off from the previous quarter also. So you look at previous quarter, it was at 4.35%. Your low-cost deposit actually has remained steady. Despite that, there is a shave off in the margins.
Okay, all right, Abhishek, we'll give you some more time to look at those numbers. For the time being, we have Kajal Gandhi, a banking analyst at ICICI Direct, who joins us on the phone line. Hi, Kajal, you had a look at those numbers. We have the loan growth as well that's coming in there at around 24%. So that's a tad bit better.
Just some more numbers. Okay, slippages have come in at 321 crore, which are much lower on a year-on-year basis. But Abhishek, on a quarter-on-quarter basis, how would the slippage figure be? 321 crore is what they've done in this quarter.
No details of quarter-on-quarter.
I think we have one more detail that we can pull up. That's the loan growth that was just flashing through in the screen. That's coming at around 24%. We were working with a number of around 20% approximately. So I think that will be a little bit better than what we were working with. And the stock has recovered a bit from the low point of the day. But let's get in Kajal Gandhi. Kajal, you've had a look at these numbers. The profit number is a little lower. We have the NIMs that have come in at around 4.3% and loan growth at around 24%. How would you read these numbers?
I think loan growth at 24% is better because the growth run rate was around 20% last year, and they were guiding that they will improve, and this is quite a good trend. So we have to see the breakup, like whether it is more on the corporate side or it is on the retail side. Maybe one factor will be CV segment, but then we have to see their corporate side also. And apart from that, I think provision is slightly higher than estimated because quarter on quarter we were expecting it should have been marginally lower, considering the scenario that last quarter was slightly on the higher side. So that is, I think, a bit of on the higher side.
Okay. Well, they haven't availed of the dispensation of amortizing the M2M losses, Kotak Mahindra Bank. Also, one more internal on the asset quality. The SMA2 book is now 189 crore, which compares with 72 crore a quarter ago. So the SMA2 book has increased to 189 crore, and the slippage figure for the quarter is at 321 crores. The stock, by the way, is now down just 0.5%, so a bit of an intraday recovery seen, or a bounce back seen in Kotak Mahindra Bank. Sanjeev Bhasin of IIFL is also with us. Sanjeev, are you a bit disappointed with Kotak Mahindra Bank's numbers, and is the dip a buying opportunity?
No, I think the numbers are in line. Okay. It's as per our estimate. And you please take in count that in the last 2 quarters, the 811 which they launched on free, low balance deposits which they garnered will be the one which may have, seen a little bit of lower net interest income. But definitely, I think these numbers are ahead because their order book credit growth is very strong, and that is telling you that they've substituted and they've garnered more market share by offering the, CASA ratio may have been better because they've got more people on the to open accounts on the basis of zero maintenance and so on and so forth. So I think these are very, very in-line numbers. And like you said, this has been an outperforming stock. Even though it's one of the most expensive private stocks, we still think that targets of 1550 to 1600 by the end of the year should be on the card.
Okay, all right. Just hold on to that thought, Sanjeev. Abhishek, you have further details that you want to come up with?
The loan growth has primarily been driven by corporate portfolio, the CVC portfolio, which we are seeing a turnaround in the sector itself, wherein even the CV sales are very strong, and even the small business and personal loan and credit card. Now, these are high margin business or high yielding business. So that book has grown at 43.5% YOY, CV portfolio growing by 40% on a YOY basis, while corporate portfolio has grown by more than 25% on a YOY basis. What has impacted is the business banking. Business banking generally refers to LAP, or the loan against property amongst bankers. So that book has grown at just 3.4%, agri book at just 14.5%. So overall, this high yielding portfolio of CV, small business, personal loan have been aiding the margins, and low cost deposit share at 50.3% has held the NIM at 4.3%. So asset quality remains stable, while there is a slight hiccup in their credit cost or the provisions for NPA.
Okay, Kajal, what would be your own fair value for Kotak Mahindra Bank?
So we had an initially target price of 1440 that we had based on the SOTP. And since the bank is doing quite good, there will be, it's already trading at a higher multiple, but we'll consider it again how the bank performance is. And if the things are going to sustain on a better side and the growth is both on the retail and the corporate side, we should look at bit higher multiples.
Okay, all right. Thanks so much for that, Kajal, as well as Sanjeev, for joining in and running us through those details. The stock has seen quite a big recovery actually from the low point of the day. Then, one sector that's doing well is some of these smaller PSU banking stocks. So let's pull up Bank of India, OBC and Canara Bank as well. The intraday chart of these smaller banks should come up for you. All of them have moved to the high point of the day all of a sudden, and volumes as well have spiked up big time. Even OBC, let's get OBC, Union Bank, Syndicate Bank, the whole host of them, all of them suddenly seen a big spike up. But we have Manisha Gupta with us. Manisha, you're going to tell us about commodities and I think the monsoons as well.
Oh, well, yes, the monsoons first, because while, of course, we have seen the deficiency narrow as we move ahead. So the number that we get from IMD is saying that 1st of June to 18th of July, the rainfall is now just about 3% below normal, which actually doesn't mean much. But the concerned areas really are UP and Bihar. That is where it is a deficient monsoon. If you look at the sowing, that also has declined quite sharply. And what we are given to understand as per the data is that 56 of the 75 UP districts are looking at below normal rainfall, and out of these 30 districts have received just about 5% of normal rainfall. This is an important belt actually when you look at paddy and maize. So that sowing of course has been impacted as of now as per the numbers there. We are joined by Mr. D.S. Pai of IMD to talk more about that. Mr. Pai, hi, thank you so much for taking time out. What is your sense really? First of all, of course, the overall monsoon, what is your sense? How would you look at the monsoon until time?
After remaining weak monsoon condition in the first week of July, the last 1 week or about 10 days, monsoon has been active over central India, and that has given rise to good rainfall activity throughout the subdivisions across the monsoon trough zone. Only, as you said correctly, the concerned regions are Uttar Pradesh and Bihar, Jharkhand, etc. However, we are expecting that in the next few days, there will be increased rainfall activity over this region, particularly because one low pressure system is forming over Bay of Bengal in 24 hours to 48 hours. And thereafter, in the last week of July, there is a possibility of monsoon trough moving towards the foothills of Himalayas. During that time, we can expect increased rainfall activity over this.
Even with the kind of rainfall that you are predicting, especially in UP, Bihar and Jharkhand, would you say that there is a possibility of normal rains there, or will these areas end this season with a bit of a deficiency?
Yes, of now there is a deficiency of around 45 to 47%. West UP is 45% and East UP 47. And as per the model predictions, next 3 days there will be heavy to very heavy rainfall activity over West Uttar Pradesh, though there will be some rainfall activity in the East Uttar Pradesh also. But there will be significant improvement in the rainfall activity, particularly over West UP. But thereafter, in the last week of July and early part of August, there should be increased rainfall activity throughout the UP and foothills of Himalayan belt.
Mr. Pai, also, what is the sense in the central and the northern part of India? As you said, the monsoons are progressing well, but are we looking at comfortable numbers going forward?
Yeah, you can see that central India, all the subdivisions are in the normal or excess category. In fact, central India together, there is a 15% of rainfall more than normal. And along with that, southern peninsula also, except for Lakshadweep, all the subdivisions are in the normal or above normal category. So as such, southern peninsula and central India, everything is fine. Even in the northwest India, Rajasthan, Jammu and Kashmir, Himachal Pradesh, Punjab, and to some extent Haryana, Chandigarh, Delhi, everything is in the normal category. So as you said, only the problem is in Uttar Pradesh and the northeastern region.
Got that. One final question, Mr. Pai. So how are we looking at July? Do you think 101% of LPA can be achieved? And also, are you looking at August? Are you still sticking to those numbers?
Yeah, you can see that from the 1st July to 18 July, as of now, it is 100% because of increased rainfall activity last 1 week. And by going now next 12 days, there will be again a normal to above normal rainfall activity. So we are hopeful that it will be around our prediction of 101%.
After over a decade after buying Novelis, Kumar Mangalam Birla's flagship Hindalco is all set to announce another large deal abroad. Sources tell CNBC TV18 that Hindalco is in the final stages of acquiring a US-based company, Aleris. Nisha Podar joins us with the exclusive detail. Nisha, there were a lot of suitors for Aleris, right? Vedanta was also reportedly interested in this particular US asset. But it looks like Hindalco has pipped the others and closed the deal.
That's right, Reema. In fact, it's a global transaction, and Novelis as well as Hindalco have been in talks with Aleris and buying out that company for a while and have pipped various suitors which were in the fray. In fact, I know for last few months, Hindalco was involved in a due diligence process, and just recently, as recent as last week, is what we gather from our sources with direct knowledge, is when Aleris International as well as Hindalco have come to terms with all the terms of the negotiations and agreed on a deal at that front. So we do gather that Hindalco is likely to announce this acquisition very soon. It is in the final stages, and they are putting final touches to this particular transaction. It's a large transaction worth $2.5 billion for Hindalco. It's a large transaction. But remember that it's going to be a big strategic fit for its Canadian firm Novelis. Now remember that as far as tying up funds is concerned, Hindalco is sitting on almost 40,000 crore rupees of net debt around this time, and it will be looking at tying up more debt. That could be on the books of Novelis, which is the Canadian firm, but also I gather from sources with direct knowledge that they are looking at various options for an equity fundraising, and there again a Hindalco listing its ADR is one of the possibilities, though I wouldn't say that they have firmed up their plan there. So all the negotiations negotiations and deal talks are pretty much done, and tying up funds is what is left at Hindalco's level, is what I gather from sources with direct knowledge. I also spoke to some of the company sources, and I did gather that the presence in North America, and especially their footprint in the automotive segment for Aleris, is something that is going to be a big strategic fit for Novelis, which has been looking at expanding. And remember, in the recent times, they have changed their product mix to move more towards the automotive sector as well. So that's one of the things that can really be a driver. It's going to be a large transaction at this point, and an announcement is likely very soon, is also what I gather from sources with direct knowledge.
All right, Nisha, thanks so much for that. Just to give you some basic numbers, Aleris last year, that's in 2017, the EBITDA that they did was little more than $200 million. Now, if that valuation of around $2.5 billion does hold, then you're acquiring it at around 10 times. 10 times its EBITDA. So that's something that the street wouldn't like. What the street will like is, in fact, their focus on value-added products. Aleris as well as Novelis, they compete in various markets. So if they come together, then that competition goes out of the window. And also the focus on value-added products does continue. So that will be the positive, but the negative will be, in fact, the valuations. $2.5 billion, on an EBITDA of around $210 million. That would mean an EV upon EBITDA of more than 10 times. That's something that the street will be a little dicey on, given that aluminium prices, as it is, have corrected from around $2,500 per ton to around $2,050 per ton. The stock has moved to the low point of the day as we speak.
Stock is also falling because, Nigel, the theme that Hindalco had been putting out in the market is that they want to reduce debt, and this is going to increase the debt component for Hindalco on a consolidated basis also, even if it is non-recourse in nature and will not consolidate. It will not come in the standalone books of Hindalco on a quarter-on-quarter basis. But remember, Novelis is a 100% subsidiary of Hindalco, and therefore Aleris International will be 100% subsidiary of probably its firm, Canadian firm. So in a net, it's going to be 100% consolidation of that debt as well, and that's something, in my view, is what the street will not like at this point.
Absolutely, and Novelis has been making an effort to reduce the net debt upon EBITDA, and in fact, this will put that in a bit of a tizzy. We'll wrap up on this show. You stay with us. Business Lunch comes up next.
TCNS Clothing Company Limited proposes an initial public offer of equity shares of face value of ₹2 each for cash at a price band of ₹714 to ₹716 per equity share. Offer opens on Wednesday, July 18, 2018. Offer closes on